Welcome, crypto fam, to the #1 daily Bitcoin pod. Bitcoin still hovering above 63. In fact, we even touched 64,000 here this morning. In today's show, I'll be sharing the latest Bitcoin technical analysis, as well as breaking news. Telegram will now share users' IP addresses and phone numbers to governments when legally required. Founder and CEO Pavel Durov was arrested in France last month, and the government already infiltrated. Go figure. And quoting Max Kaiser, everything goes to zero against Bitcoin, including centralized garbage Ethereum. We'll also be discussing China still controlling 55% of the Bitcoin hash rate despite the crypto ban. We'll also be discussing breaking news. BlackRock Bitcoin ETF demands a 12-hour Bitcoin withdrawal from Coinbase. I'll be breaking this down for you. We'll also be discussing Bitcoin leads 321 million in crypto inflows following the Fed rate reduction. As you know, Jay Powell recently reduced the interest rates 0.5%. That's the first rate cut since like 2020. We'll also be discussing Donald Trump introduces his own coin, but it's not what you think. That's right. The former U.S. president is set to launch his new coins on Wednesday, 2 more days, but it's not what crypto users expect. I'll be breaking this down for you. We'll also be discussing the latest with Saylor with his a $13 million long-term Bitcoin price prediction. I'll be breaking down some of the math for you. And MicroStrategy, by the way, now holds 252,200 Bitcoin, and they're in the process of acquiring another $1.1 billion worth. We'll also be taking a look at the overall crypto market. All this, plus so much more in today's show. But anyways, fam, if you're new to the channel, very important to smash the likes. Go ahead and subscribe, then hit that bell icon to turn on all notifications to receive daily premium crypto news alerts every day, just like this. Today is pod episode number 1766. It's Monday, September 23rd, 2024. Excuse me. I'm your host, JV, and we have lots to cover. Bitcoin still in the green. We already tapped 64,000 this morning earlier when I checked the price. We're currently at roughly 63,400, barely in the green for the day, but it's been maintaining above 63, which is definitely a good sign. Let's pull up Coin 360. We're above 63.4 here, up 0.2% on the day. We have Ether up 3.6%, trading just under 2,700, while Solana and XRP are currently correcting and in the red. And checking out coinmarketcap.com. Current crypto market cap is still on the climb at 2.23 trillion, and the Bitcoin market cap is 1.25 trillion. We got roughly 83 billion worth of volume in the past 24 hours, meaning it's up 73%. And the Bitcoin dominance on the decline a bit this morning at 56.1%, and the Ether dominance at 14.5%. Now, which alts, if any, are you most bullish on for the bull? Let me know. Here's the top gainers of the top 100 on the day. We have Arweave, Tau, and Celestia. And checking out the crypto bubbles, we get a visual perspective. Let's start on the day, and then we'll zoom back out on the month. I'd say safe to say 80% of the market back in the green, which we love to see the gains. And zooming out on the monthly, it's like we flipped that 80% in the red and maybe 20% in the green. And checking out the Crypto Greed and Fear Index, we're still neutral, same as yesterday and last week. Last week was actually a 39 in fear, and then we flipped neutral, and last month a 56 in greed. And checking out the time chain calendar, we have 187,433 blocks to go into the next halving, which is estimated to take place April of 2028. And we're currently on block number 862,567, and you can currently exchange $1 for 1,579 Satoshis. Again, $1 will get you 1,579 sats at today's exchange. So there you have it, yo. But anyways, let's continue with today's technical analysis. Check out some of the charts and go from there. The headline here reads, Bitcoin's new price targets of over 80,000 may not actually be the all-time high. Well, of course not. Temporary all-time high only makes sense. Bitcoin's price is only 14% below its all-time high at the moment, and favorable conditions have produced targets of over 80,000 in the coming weeks. Yet a new all-time high of around 100 Gs might not be as impressive a feat as imagined when adjusted for inflation. Now, Luke Broyles, Bitcoin analyst, argues the Bitcoin crossing the elusive 100,000 mark will barely match Bitcoin's buying value in 2021. In an X post, Broyles highlights that if adjusted for inflation, the all-time high price from 2021 will be 83,000 at the moment. Good point. Now, data derived from U.S. inflation calculator suggests this is fairly accurate. An item bought for around $69,000, assuming people bought Bitcoin at the 2021 top. I believe that was November 10th of 2021. It would currently be priced at $80,200 in the ballpark, with a current cumulative rate of inflation of 16.2%. Ouch. The U.S. inflation calculator measures the dollar's buying power over a period of time. Keeping that in mind, he added the following. By the time we have the next round of printing in the next 6 to 18 months, it'll be 95,000. 100,000 nominal Bitcoin price in 2025 is quite possibly barely getting us to the 2021 levels. So yeah, Bitcoin price up 18% over the past 14 days, despite September being a historically bearish period. Now Bitcoin is facing its final test before undergoing the bullish trend shift. Let's go. As shown here in the chart, Bitcoin has been posting lower highs and lower lows on the one-day chart since March of this year. Now Bitcoin's currently looking to flip the resistance supply zone of 65,000, which will lead to a change of character. Send it. Now, if 65,000 can be flipped into support, the long-term downtrend should undergo a change, and a higher high, higher low pattern will take shape, producing a new uptrend. Immediate resistance above 65 Gs resides at around 71.5. Now, also, it was reported recently a potential breakout could happen in September, which may eventually result in a rally to 86,000. Let me know if you agree with that. The price action has played out accordingly thus far, as a megaphone pattern remains in play for a 34% upswing over the next couple of weeks. So get ready, yo. Stack sats accordingly. Could you see that happening? I most definitely can. You already know. The megaphone pattern includes a similar setup of higher highs and lower lows, while can validate a macro top or macro bottom. But at the moment, the price is on the rise, which means Bitcoin is closing in on confirming a bottom and a potential path to higher prices. Now for some breaking news, and then we'll dive into the live charts. Telegram will now share the user IP addresses and phone numbers to governments when legally required. As you know, Pavel, their CEO, was recently detained and arrested in France, and seems he is cooperating with the government. And in other news, Andreas Antonopoulos, shout out to him. He's the one who orange pilled me, so I give him full credit. It was one of his TED Talks called The Internet of Money that just instantly made me see the big picture about Bitcoin and get all in. So shout out Andreas. He's a legend, an OG. Bitcoin is not unregulated. It is regulated by algorithm instead of being regulated by the government. Bureaucracies. Uncorrupted. 100. Also quoting Max Kaiser, everything goes to zero against Bitcoin, including centralized garbage, Ethereum. And in other news, actually, let's dive right into the live charts. This is the 1 month. Let's zoom into the 1 hour, and then we'll work our way back out. And this is live and in the flesh right now via Coinbase. Brought to you by TradingView. Let me switch up the scene so you can see it cleaner on your screen. There we go. We're currently just above $63,400. We don't have any particular targets on the 1 hour, but things have been bullish all this week, really. Let's zoom out for the 4 hour chart. Again, this is live and in the flesh via TradingView, via Coinbase. We do have a lot of targets here. We do have a bullish pennant formation. We have a target in the green sitting at roughly 68,200. And we have a more bullish target in the blue sitting all the way at 81,200. And we do have a bear target you need to be aware of as well, sitting at 37,800. Again, this is the 4 hour chart. Let's zoom out a little further. We'll check out the 1 day, then the 1 week, and the 1 month. This is the 1 day. We've had 1, 2, 3, 4, 5 consecutive green daily closes. Let's see if we can continue the bullish momentum, family, especially considering we're heading into Q4 right around the corner. We do have a bottom target visible here at 47.7 you should be aware of. And zooming out from the daily, we'll check out the 1 week. That's where we have the sexy cup and handle pattern, which is currently sitting at $124,400. I think we could potentially hit this target, and happy 420, by the way. I think we can hit this target in Q4 of this year. Let me know if you can see that happening. And zooming out a little further, we'll check out the monthly for a broader perspective. And here's the monthly chart. Past 5-6 months have been trading sideways, pretty boring. But prior to that, we had like 7 green consecutive months, as you can see in that staircase formation. Let's see if we can continue the bullishness this into Q4, and let me know your thoughts where you feel will likely head from here, and I'll read your comments out loud, family. But anyways, welcome everyone just joining the stream. Let's continue with the news because we got a lot of news to share with you guys. We discussed the latest TA. Now let's discuss China. I actually lived in China for 13 months, believe it or not, back in 2010, a very long time ago. I taught English back in the good old days, and if you don't know, now you know. This headline reads, China still controls 55% of the Bitcoin hash rate, despite the crypto ban. That's right. Chinese Bitcoin miners still control the lion's share of the global network despite the country's ban on cryptos. Over 55% of the Bitcoin mining network is still controlled by Chinese mining pools, according to Qi Jiangzhu, founder and CEO of CryptoQuant. However, Bitcoin mining dominance is slowly shifting to U.S. mining firms. He shared here on the next post today, quoting him here, Chinese mining pools operate 55% of the network, while U.S. pools manage 40%. U.S. pools primarily cater to institutional miners in America, while Chinese pools support relatively smaller miners in Asia. I mean, here's the chart here. Chinese pools make up 55%. USA pools, 40%. Now, China's surprising dominance over the network comes despite the country's blanket ban on Bitcoin mining and trading, which officially went into effect back in 2021. Now, China is planning significant amendments to its anti-money laundering regulations in 2025, expanding them to cover crypto transactions in response to the growing demand for stricter oversight. Prominent scholars and financial experts who participated in the discussions on the revised draft of the AML regulations said that the AML law involves a relatively broad scope, making it difficult for the draft to be comprehensive. The most urgent content can only be reflected in a framework first. China imposed the blanket ban on crypto use back in 2021. How many of you remember that? Prohibiting offshore exchanges from offering services and banning all forms of mining. However, with technological advancements and the decentralized nature of crypto, mainland users have found ways to access the crypto market, leading to money laundering risks. The new amended regulations aim to impose stricter guidelines to curb such activities. And on July 14th, Mike Novogratz, the Galaxy Digital CEO, shared on X that he has been hearing reports suggesting China is likely to unban Bitcoin by late 2024. As Novogratz shared here, if this is true, and it's second time I've heard in weeks, it's a huge deal. Anyone have insights? And this was according to a news source that shared big breaking news. China likely to unban Bitcoin in Q4 2024, according to reports, and it shows you a picture of the president. I guess that's President Xi right here. But let me know. Now, Bitcoin miners around the world face significant pressure in August, marking the lowest revenue month in a year. Miner revenue reached $827 million in August, dropping over 10% from July's $927 million, but it is still up 5% from August of 2023. Now, it is the worst revenue month for Bitcoin miners since September of 2023, when they earned $727 million. Bitcoin hovered around 25,000 throughout the month. Meanwhile, the number of mined Bitcoin for the month slightly dropped from around 14,700 Bitcoin mined in July to 13,800 Bitcoin in August. So there you go, yo. Let me know your thoughts on China. And what did Trump say? He wants to make America the Bitcoin mining hub of the world. We got to get that hash rate power over here back in the States predominantly, family. Let me know if you think that'll turn into fruition. Let's continue with the news, shall we? Our next story of the day, here's the latest with BlackRock. Breaking news, headline reads, BlackRock Bitcoin ETF demands a 12-hour Bitcoin withdrawal from Coinbase. That's right. Check this out, yo. The world's largest asset manager has filed for an amendment for its Bitcoin ETF following widespread investor concerns over Coinbase's on-chain settlement practices. Is there shenanigans going on? That's the question. BlackRock filed an amendment to require Bitcoin withdrawals within 12 hours from the ETF custodian. Coinbase, according to a September 16th filing with the US SEC, here's what BlackRock shared in the filing. Subject to confirmation of the foregoing required minimum balance, Coinbase custody shall process a withdrawal of digital assets from the custodial account to a public blockchain address within 12 hours of obtaining an instruction from client or client's authorized representatives. BlackRock's new amendment follows widespread industry concerns about Coinbase ETF custodial practices. Increasingly, investors have been asking Coinbase to provide on-chain proof of the Bitcoin bought on behalf of the spot Bitcoin ETFs to make sure they're actually buying them and holding them. Coinbase is the custodian for 10 out of the 11 spot Bitcoin ETFs 8 out of the 9 recently approved Ether ETFs as well in the US. I think the only one they're not the custodian for, correct me if I'm wrong, but I think it's Fidelity. Now, despite the newfound institutional inflows from the Bitcoin ETFs, the Bitcoin prices have been stagnating for the past 3 months. This is partly what prompted widespread investor concerns that Coinbase was buying paper Bitcoin. Me too, because the price hasn't been moving. Meanwhile, they're doing massive volume, so I was very concerned. I was one of them. Or a better name, Bitcoin IOUs, on behalf of the Bitcoin ETF issuers, hence suppressing the Bitcoin price. Now, however, all ETF transactions are ultimately settled on chain, despite not publicly sharing all ETF addresses, according to Brian Armstrong. So the CEO says. In response to the investor concerns, here's what Brian wrote September 14th on X. If you want audits, Deloitte audits us annually. We're a public company. I doubt our institutional clients want people dusting all their addresses, and it is not our place to share for them. This is what it looks like if you want a bunch of institutional money to flow into Bitcoin. Let me know if you agree or disagree with Armstrong, and do you trust them? Are they purchasing up paper IOUs to suppress the market, or the real thing? I want to know your thoughts. And since their launch in January, you know the ETFs went live officially January 11th. There have already been almost 60 billion worth of cumulative on-chain holdings, according to Dune data. BlackRock alone remains the largest Bitcoin ETF with over 38% of the market share, which is 22.5 billion worth of on-chain holdings. And obviously, Coinbase is their custodian, as with the majority of them, minus Fidelity. Now, despite the increasing accusations, ETFs weren't the reason behind Bitcoin's recent price slump caused by native Bitcoin holders, according to Eric Balchunas, senior ETF analyst at Bloomberg, who shared the following on X. I get why these theories exist, and people want to scapegoat the ETFs because it is too unthinkable that the native hodlers could be the sellers. But they are. All the ETFs and BlackRock have done is save Bitcoin's price from the abyss repeatedly. And by February 15th, ETFs accounted for 75% of the new investment into Bitcoin, which then surpassed the 50,000 mark. I believe it was on February 12th. I remember because it was the day after my birthday on February 11th. Let's discuss this 321 million worth of inflows. Headline reads, Bitcoin leads 321 million crypto inflows following the Fed rate reduction. Crypto investment products have experienced substantial inflows following the U.S. Fed's decision to lower interest rates, which they did last week. I think it was a 0.5% cut for the first time since 2020, from my knowledge. I don't recall them cutting rates anytime recent. Digital asset investment products posted a second consecutive week of inflows during the week of September 15th to the 21st, totaling 321 milli. The new weekly inflows are slightly down from the previous week, which totaled 436 million worth of inflows. The surge was likely driven by the FOMC decision to cut interest rates by 50 basis points. CoinShares stated in its latest weekly digital asset fund flow reported release September 23rd. And according to CoinShares, Bitcoin-based investment products were the primary focus last week, with 284 million of inflows. The report mentioned that recent Bitcoin price changes triggered growing inflows into the short Bitcoin investment products, totaling $5.1 million. And on the other hand, Ethereum remained the outlier, CoinShares noted, as Ether-based investment products saw outflows for the 5th consecutive week, totaling 29 million last week. And according to the CoinShares analysis, the repeated ETH outflows were due to the persistent outflows from the Grayscale Ethereum Trust and insufficient inflows for the newly issued ETFs. Additionally, CoinShares noted that Solana investment products continue to see small but consistent weekly inflows, amassing 3.2 million last week. And a little deeper onto the 50 BP rate cut impact of the markets, the U.S. Fed issued an FOMC statement September 18th, officially announcing the Board of Governors' decision to approve a 50 BP decrease, which ultimately means a 0.5 percentage point. The decision marked the first time the U.S. reduced borrowing costs since March of 2020, post-Novid, when the Fed cut interest rates after the Novid outbreak. And according to CoinShares, the rate cuts have fueled a positive reaction into the markets, with total assets under management surging 9%. Total investment product volumes also edged up 9% from the previous week to reach $9.5 billion, according to the firm. And while Bitcoin investment products saw a positive trend amid the 50 BP reduction, some analysts previously predicted the opposite, quoting Black-Scholes from Bybit here. Historical data suggests Bitcoin and other risk-on assets asset showed resilience during the non-recessionary rate cut cycles. However, aggressive rate cuts during recessionary periods typically result in negative market outcomes. These developments have the derivative markets on its toes, with notably volatility premiums assigned to the Bitcoin options expiring in late 2024, early 2025. Meanwhile, BitMEX co-founder Arthur Hayes just predicted markets would collapse in the immediate aftermath of the Fed rate cuts, slamming U.S. central banks for cutting rates amid growing U.S. dollar issuance and increased government spending. Following the rate cuts, investors have also seen increasingly buying gold, with the price steadily seeing new all-time highs. I think it's at, $2,629 is the new high for an ounce of gold. Let me know if any of you are invested into gold. And according to Boss Kujman, CEO of asset manager DHF Capital, the 50 BP rate cut could help extend the uptrend in gold prices, which could continue to see new records thanks to other additional supporting factors, including them here. In this regard, the Federal Reserve's dot plot shows a steeper decline in interest rates than previously forecast by the central bank. This trajectory could further cement gains in the gold prices. But anyways, fam, next story of the day, let's discuss this Trump coin. Wednesday, which is in 2 days, there's supposed to be a launch of something going on, and let's read this. Donald Trump introduces his own coin, but it's not what you think. Here we go. Trump announced a new coin to raise cash for his electoral campaign. Dubbed the President Trump First Edition Silver Medallion, the project aims to give silver to Americans who support the Republican presidential aspirant. However, crypto users still expect Trump to roll out an official crypto asset for his electoral push. Interesting. The presidential candidate noted in a recent announcement that the incoming coins will sell for $100 per unit via the realtrumpcoins.com website. He explained that the digital asset is coined from 99.9% fine silver. The limited edition coin portrays Trump's face on one side and the White House with the saying, "In God We Trust," on the other side. Now, with a few weeks to the much anticipated U.S. presidential election, I think it's November 5th, right, fam? Trump is actively exploring diverse ways to raise cash to finance his campaigns. The soon-to-be launched silver coins will be his latest effort to secure funds for his electoral movement. Trump emphasized that the silver-based asset is the only official coin he designed and spearheaded its minting in the United States. Now, over the past months, multiple meme coins themed around Trump have rolled out. Still, he refuted ties to those tokens while introducing his silver-themed coins. Here's what Trump had to share. "I've seen a lot of coins out there using my very beautiful face, but they are not the official coin. RealTrumpCoin.com is the only place to get an official Trump coin." And at first glance, Trump's latest announcement of the new official coin may seem like he is finally launching a crypto asset. For months, his fans have anticipated an official crypto from the political figure. Last week, 84% of the poly market bettors expected a Trump coin following the launch of the crypto project called World Liberty Financial. And although Trump's World Liberty Financial was accompanied by a governance token called WLFI, the digital asset lacked most of the features of a cryptocurrency. So there you have it. And also, this was breaking news just yesterday. Donald Trump says, "I think crypto has a great future. Maybe we'll pay off the $35 trillion debt with it." Crazy. But nonetheless, let me know your thoughts. Now for our featured story of the day. Crypto can soar. And when I speak about crypto, I'm talking about the king. Bitcoin can soar 23,000% over the next 2 decades, according to MicroStrategy's Mikey Saylor. That's right. He was recently doing the rounds and doubled down on his bullish price prediction. So let's start right here, quoting Michael Saylor from this recent interview. Bitcoin's 0.01% of the capital in the world right now. I think it's going to go to 7% of the capital. My long-term forecast is it is going to 13 million per coin over 21 years. And right now, MicroStrategy is hodling 252,200 Bitcoin. That does not include Mikey Saylor's personal stash. And as Max Kaiser shared and El Brandino Martinez, Bitcoin's Employee of the Month, Mikey Saylor, you're doing a hell of a job. Now go get your shine box, brother. And in other headlines, as you can see here, Bitcoin can soar 23,000% over the next 2 decades, according to Michael Saylor. So let's break this one down. Bitcoin will skyrocket over the long run. Amongst them predicting this is Mikey Saylor, founder and executive chair of MicroStrategy. He recently doubled down on his prediction that a single Bitcoin would be worth $13 million by the year 2045. Let me know if you agree or disagree with that prediction. And at last, the report, MicroStrategy showed owning 226,500 Bitcoin, but they just purchased more. So hence why I shared earlier, the new number is 252,200 Bitcoin. And also he's in the process of purchasing 1.1 billion more in Bitcoin. So that number is only going to go up from here, family. So Bloomberg reported last month, Saylor himself also owns 1 billion worth of Bitcoin. You can add to that tally. Can someone run the math? How many Bitcoin is approximately 1 billion worth at today's price? Let me know in that chat. So based on the price of 55,000, clearly we're currently at 63,000, but just for a ballpark target from the time of the prediction, that means a 13 million target represents an astronomical 23,000% return. If you buy today and hodl for the next 2 decades, not too shabby of an upside, right? Now, obviously a lot has to happen for that to become reality, but let's take a deeper look. Yes, seeing the 13 million price tag for Bitcoin can induce a fair amount of sticker shock. You can say that again. But if you dig into the numbers, the math actually starts to make sense. Preach. And a lot of that has to do with the compounding power of money. If any asset is allowed to compound in value for a long period of time, the results have the potential to shock. That's right, exponential gains, homie. In the case of the Biddy, it would require a compound annual growth rate of 30% for the magic to happen. And to jump from 55,000 to where a ballpark it is today to 13 million in 2045. In other words, a Bitcoin can increase in value by a modest 30% per year. For the next 21 years, an upfront investment of 55,000 would turn into 13 million. Let that sink in. And that's just with a 30% annualized gain, which is like nothing. Bitcoin's been outperforming that easy peasy for the past 15 years. Since the Genesis block, January 3rd of 2009. And while it may be unlikely, a CAGR of 30% for Bitcoin is not out of the question. For example, from 2011 to 2021, Bitcoin delivered annualized returns of 230% per year, and Bitcoin returned approximately 150% just last year in 2023. And already this year, Bitcoin's up more than 30%. So over the past 5 years, the only blemish was in 2022 when Bitcoin fell nearly 65%. And you can thank Scam Bankman-Fried for that one. So what can investors realistically expect? Let's discuss it. In an interview this month with CNBC, Saylor predicted that that during the next 2 decades, Bitcoin's annual return would steadily fall over time from about 44% a year to 40% to 35% to 30% to 25% to, well, you get the idea. The final long-run number for Bitcoin, says Saylor, would be the annual return of the S&P 500 plus an extra 8% to compensate investors for the extra risk. And at some point, of course, it's worth taking a moment to ponder what a price tag of 13 million really means for Bitcoin. Based on its current circulating coin supply of 20 million, that implies a future market cap of 260 trillion. That dwarfs the value of any tech stock today. And in fact, it dwarfs the value of the entire S&P, which today sits at around 45 trillion. And guess who owns over 90% of the companies in the S&P 500? You guessed right. BlackRock. And now they're coming for your biddies, family, so stack accordingly. And even if we were to assume that the U.S. stocks will grow at a rate of 10% per year over the next 20 years, a price tag of 13 million still implies that Bitcoin would represent an astonishing amount of the world's wealth in the year 2045. For that reason alone, it's worth having a healthy dose of skepticism about the Bitcoin future price. But there you go, yo. Let me know if you agree, disagree with Mikey Saylor. Can you see a $13 million biddy in the next 21 years? Holla at your boy, and welcome everyone to the Q&A segment of the live stream. I'm going to do my best to read everyone's comments out loud, and if you want your comments to flow on the screen, you got to visit the YouTube channel, the direct link, cryptonewsalerts.net. So if you don't know, now you know. And shout out everyone on the stream. I see we got 1,200 people already here. Graduated high school in 87, Dusty Hunt. When all the other fiat fails, Bitcoin will be waiting to catch you. Diana says JV is 83. 8 plus 3 equals 11. He told us. Exactly. I was born in 83, the same year as Return of the Dragon. I mean, Return of the Jedi, my bad. Yeah, Return of the Dragon was probably a decade prior to that. My apologies. But nonetheless, yeah, I was born in 83, and of course that's an 11. I was born on the 11th. My daughter has the same birthday as me on the 11th, so 1111 is a very divine omen to your boy right here.